Hello, YouTube. Please let me know that you can hear my voice in the chat by throwing those A's in there. Please go ahead and throw those A's in the chat, YouTube, and I will go ahead and get this thing rolling as soon as humanly possible. But go ahead and throw those A's in the chat now. Hey, Susan, how you doing? Candace, good to see you. Options, you can hear it too. Good deal. Good deal. Hey, Kristen, good to see you too. Okay. Grotto, please make sure to mute your microphone, my brother. Major Tom, also, please try to mute your microphones so that we can make sure to have no, feedback in case I'm too close to your speakers. So, hey, Major Tom, how you doing? If you need help muting the microphone, let me know, and I can do it. I can do it for you from my end as well. For some reason, you cannot hear. Okay. Remember this setting here, team. Okay, so this is going to be, you know what? I can share with YouTube what we're looking at, right? What you can do is look at my screen, right? So I'm going to share with you the Discord stream, okay? And I want you to click on this button here, and on the output device, make sure to select what output device you're using. If you're using headphones, if you're using your built-in speakers, within your laptop, right? So you can go ahead and select that output device right here. Okay, yeah, go ahead and reboot, team. Just in case you're not really getting it, it's always going to be a little bit rough in the first week and second week, right? But as long as I can have YouTube in there and the majority here, then we'll go ahead and get this thing rolling. It's roboting. Guys, please let me know that you June, did you I'm sorry, I just want to make sure that everyone else can hear me correctly. Senor Pennington, you good? All good here, loud and clear. Okay. June, I'm going to ask you to reboot your system as well because I'm getting the majority of people here saying that they can hear me, that they could hear me okay. So please try and reboot your system and then come right back in. But remember always, right, that this is being recorded into YouTube, and you can always refer back to the beginning, just in case you come in a little late, right? But yeah. Caroline saying fine on my end. Okay, good. Mark, you can hear me just fine. If I can't hear, I usually have to close Discord through the task manager and then reopen it, but all good here. Okay, so that what he means is a force, what is it, like through your task manager on Windows. So if you're using a Windows PC, you can use the task manager, Control Alt plus Delete, and then turn off and then end the task called Discord. Okay, good. I'm definitely getting the majority of people here hearing me fine, buddy. So June, if you can still hear me, try to reboot, and we'll go ahead and get this thing. We'll go ahead and get this thing rolling. And looks like YouTube is online and good to go. So YouTube, what you're looking at here are actually the master students inside of the Discord, where this is going to continue into next Monday and following the 17-week mentorship schedule, right? So this is what I'm doing here is opening up a potential 3, maybe 4 seats as the class is completely filled, and I think I could still fit maybe 3 or 4 more people. So go ahead and get in touch with me at ArcMastersCourse@gmail.com. Masters is plural. ArcMastersCourse@gmail.com. You can also find the email in the description below in YouTube. No, Grotto, that's it's entirely okay. It's entirely okay. We're gonna be I would you're gonna have the PDF after this. In fact, it's already there in week number 2. You can use that PDF to write notes on, and or you can use your own notepad, really. But you're gonna have this recording afterward too, so you can review. But as soon as we get this started, I'm gonna explain something of critical detail. You got Evernote? Oh, Evernote is great. Yeah, I completely encourage it. Okay, so all right, so without any further ado, let's just go ahead and switch over the screens here and get this thing rolling, right? So I'm going to go ahead and prepare the screens now. It's a little bit of a different process here. You know what? I think that's Major Tom. I got you, buddy. I'm going to go ahead and mute your. I'm going to go ahead and mute you for now, right? And if you need me to unmute you, just let me know, and then we'll be good. Just a sec, team. Just a quick moment. I'm going to go ahead and switch the screen over on YouTube as well. Good. It looks like YouTube is starting to fill up as well, team. Man, yeah, we have a good group already. Let's see here. Okay, good. So, how many? Just so I know, do I have any track 3 students presently in track 4 right now? I gave you access so that you can join here to for a recap. So Jay Abrams, hey ARCa, I'm trying to watch you live, but can't get much of a signal in the ER. Nothing serious. My wife sliced her hand. Okay, this is frustrating since I missed week number 1 and now week number 2. Jay, I know that's going to be a little tough for you to get that service. If anything, I would recommend YouTube and diminishing the quality of your stream into maybe a 360p instead of you using the automatic 1080 or 1440p. And I hope she's doing okay, my brother. Christina, how you doing? Okay, yeah, no problem at all. Yeah, this should work as a good recap for the track 3 students as well. Options is here from tracks 1, 2, 3, and 4. Yes, I bet, Christina. Please, I need everybody who's out in the East Coast to please try your best to stay warm. I hear you guys are under serious weather conditions, and my heart goes to those who are unable. Hey Tony, good to see you here. Okay, good. So we're actually filling up the class now. I'm happy that we waited another 5 minutes here. So this is not going to be that long of an analysis thread, luckily for us, right? But we always want to stay after and ask any questions that are pertinent to the course. As track 4 member, are we supposed to use presentation screen yet? I still see platform of users. Okay, so the top left is me on your platform of users. Go ahead and click on that one and you'll be able to see the stream live. I'm talking to you, Mark. Jay Pong, do you ever sleep, ARCa? My man be working 80 hours a week. I'm on the East Coast chilling oh my goodness, man. I appreciate you, my brother. I want to try my best. Okay, Mark, you got it. All right, good. All right, guys. So I think we are officially good to go. And yeah, let's just go ahead and get this thing rolling now. Right. So how far are we in? Right. So we're in at about 18 minutes. I'm going to make a note of that too for the master students. Oh, okay. I got you, Joe. All right, team. So master students, welcome back to the ArcMastersCourse week number 2. This is for candle analysis, and this is going to be your first journey into learning raw price action. Raw price action, as you will know, will be, or you may or may not know, actually, right? will be your forward indicator, your forward looking indicator, and the most reliable indicator you can ever use while trading stock. Daily trading stock, right? As a day trader, as a momentum trader, scalp trader, investor, even a swing trader. Okay. Any of those. Okay. Let's just put it this way. If you're trading bonds, if you're trading oil, right? If you're trading crypto, raw price action. This is going to be your foundation here, team. Okay. So let's go ahead and start off here with the next slide. I'm actually giving you the editor side of the screen here because the projector side does not want to consolidate into a smaller format, right? But okay, so what are candles, right? Yeah, go ahead and try that. Please try, Jay. I really would appreciate if you could, drop down your expectations for service. You can do that in the settings. I think it's the bottom right in your YouTube screen. Okay, so candles refer to candlestick charts, which are graphical representations of a stock's price movement over a specific time period. Candlestick charts are composed of individual candles that represent the opening, close, high, and low prices of a stock during a specific time period, such as a day or a week. Some people tend to see it over a minute, 5 minutes, right? Some people see it over a monthly. You can even see semi-annual or yearly. So there are several forms to observing your candles, and the candles are the same shapes. The candles represent the same body, the same properties. It does not matter what time period you're using. They all represent the same thing. It just depends on what time period you're in, and that's going to display to you how long it's going to take for it to close. Grota, if you got dropped on YouTube, please let me know if you have any trouble. But you can always stream on the YouTube YouTube as well if you got dropped on Discord. My apologies. Okay, so here we go. Here's a brief history. In the 18th century, a Japanese rice trader by the name of Munehisa Homa was thought to have been the first person to have created a method to track the dispersion of incoming and outgoing returns. Candles were introduced to the Western world by Steve Nissen in his book, Japanese Candlestick Charting Techniques, first published in 1991. So, first of all, let's go ahead and go over the first portion of this. A method to tracking the dispersion of incoming and outgoing returns, right? So if you have a certain point that measures a part of the candle, let's just say that I'm going to teach you where the opening and closing and all that stuff is, right? So right in here, this would be considered in the green candle, your opening of the candle, right? So back in the 18th century, they didn't have computers. They didn't have, they didn't have an iPhone 14 Max on their hands or a Samsung S23 Ultra, whatever, so so they had pretty much, their hands and a rock or chalk or something, right? So so that they can write it in a place where they can track what happened one day to the other. So in this case, they were not tracking what was happening, day to day or minute to minute, like we're able to do in these computers and our smartphones, 1 minute to another. we didn't have that, right? So what they did was actually track this by a weekly basis or a monthly basis. So they would start off their incoming material, and then their outgoing material would be measured based on a weekly or a monthly basis, which is, it's understandable because then we would measure quarters, right? We'd measure the first quarter, second, third, and fourth quarter of a year, and we'd be able to consolidate all that information into one output sheet, and it'll tell us how we did over the year. So this is how we did it before, right? We would measure, this would be Q1, right? And then we would say that, in Q2, we actually dropped all the way down here, right? So this would be Q2. And then we bumped all the way up here in Q3, right? And that's how we measured it, right? Little by little over the monthly candle. Okay. So Let's go over the second portion here. Candles were introduced to the Western world by Steve Nissen in his book, Japanese Candlestick Charting Techniques, first published in 1991. So let that sink in. Introduced to the Western world in 1991. Okay. All right. So these charting techniques were introduced in 1991. That means that we have we're babies, right? This is in its infancy. It's not to say that the candles didn't exist here. It's just saying that the techniques, the psychological part of trading this, looks like Yuka Frita said, it looks like my uncle. Nice. Okay, so it is we're still in its candle techniques and formations and psychological strength factors or weakness factors are just in its infancy, and we're still creating and understanding and studying. We're just babies here, right? So let's move on here to the next slide, right? So the candle properties. So candles carry invaluable information to the trader. Historical price data is presented in a chart to review historical price data and potential future price data based on formations or structures. And you heard it right. Future price data as well. And we will learn that as well, team. So here, before we learn the candle properties, I'm going to state something early. I'm going to change it. I'm going to change it up. I'm going to state something very, very important, because I've noticed here that the email, the welcome email for most of my master students, didn't really clear that up over the last. I want to say maybe the last three tracks, right? So we're going to go ahead and clear this up now. When I meant in my letter to you that I said I'm going to teach you my exact system from candle analysis all the way up to advanced topics and methodologies and analyses like mathematical applications, I really mean that. I really mean that from week 1, we're going to learn candles. I'm sorry, week 2, right? The introduction being week 1. From week 2, we're going to learn candles and their structures. Then we're going to move on to week number 3, which you guys can all see, right? You guys can all see on the weekly schedule and syllabus and materials of the left-hand side at the Arc University Discord. We're going to be moving to formations. So formations so we're going to understand what an individual candle is here. But then what do groups of candles do together, right? And then from there, we're going to move into moving averages. So we're going to be combining and adding every single week, one by one, throughout the 17 weeks, so that we can see how everything correlates with each other and how the system has to work in order for it to be successful. So we're going to use candles and formations. We're going to use moving averages to see how moving averages can help price action support and resist at tops and bottoms. Then we're going into charting. So we're going to understand how to compile the information that we got. For example, the wick top here, right? We're going to know in charting how to use either the wick or the closing or opening bases of a candle to draw out areas of resistance, areas of support. Where are we going to be able to use the gap? Are we going to use the gap as a support, or are we going to fill it first? All of that stuff. Right? I know that some of you may be like, what is a gap in the first place? So we'll we'll learn all that stuff as we go. And we're going to continue adding and stacking every single week on top of each other, using every week prior to that as practice. And then you're going to see, wow, ARCa, when he gets when he's streaming live to all these people, and he says, and somebody says, hey, ARCa, can you take a look at this? Can you take a look at this ticker, please? Look at Meta, or look at GTII, or look at Finger, right? All of these things that you're going to learn from me are something that I'm looking at in a split second, all in one huge jumble, to tell you what my thoughts are, right? So that's how I'm able to get through so many of these requests in like 3 to 5 minutes tops, and then we move on to the next one. So all of this stuff is the system, and I want you to understand how we're going to be stacking this one by one. Okay. It needs to follow a system. It needs to follow a process, just like you do when you go to work or when you do whatever you do in the morning, right? You get up, right? You probably yawn. You probably look at your phone, right? That's all like part of your process there. You stand up, you probably go to the bathroom. You probably go to the sink and brush your teeth, then you take a shower and you drive to work. And that all pertains to a process. So that process is all just like in real life. It is absolutely imperative and paramount that we follow within trading as well. Remember from week 1 that this process is all built around the strategy, around the love for the process, right? Because imagine that you were doing something that was returning to you $1 million a day. You're going to love what you're doing, right? I mean, arguably, right? You'll be loving what you're doing. So whatever that process is, we're going to go ahead and apply it here. So if you're a great swimmer, if you are an excellent chess player, if you know how to solve Rubik's cubes like nobody's business, right? If you know how to draw or paint, whatever that is, it all follows a process. Because you can't start any of that from like, your 5th or 6th step. You need to start from the beginning. And this is what we're learning here, team. Trading is much like all of those processes. So let's go ahead and get into the candle properties here. So please notice how the bearish candle is colored in red. That's because red is usually what we're looking at in a standard chart, that it's price declining. A bullish candle, on the other hand, is green. Right? So now this part of the candle on both the green and the red is known as the body. And these little wicks here, those little wicks are known as the shadow or a wick. That little stick here. Okay? Let's go ahead and move on to the next chart and continue this. So bearish candles versus bullish candles, or a bearish candle versus a bullish candle opening and closing is this right here. Please notice that a bearish candle closes and opens differently than a green candle, okay? So your red bearish candle opens here on top, okay? Your bullish candle opens here at the bottom, okay? That is a standard rule. It is a must know. Everyone knows this, okay? That's an opening and closing basis here, okay? So now the range high, or let's continue on this right here. So let's see, the range high low of a candle determines the potential, right? So if your green candle opened down here, that means that at a certain point throughout the history of this candle, whether it be it a 1 minute, 3 minute, or 5 minute candle, doesn't matter. At some point within that time period, it reached as high as this point here. So that's your range high. Okay, at some point it reached below here. Now, the reason why you don't have a body into here is because the candle opened at this point. So say the candle opened here, right? Let's just say that this were $10, that it opened right at this point. And the thing drops to $9.50, down here. And then it came back up. The reason why it doesn't have a body in this area is because that's not where the candle opened. The candle opened here, so it's always going to respect where the candle opened. So the range low becomes $9.50. It retraces back to where it opened, so it leaves the wick telling you that it once was there, right? And it continues upwards, right? And then it goes to this area here. Let's just say that this were $20 at this point here, right? And then it goes up to 21 right at this point. So it goes up to 21, right? It retraces, leaving behind the wick because it's telling you how far it went up. That's the range. So it comes back and it closes at this point here at $20. So now you know what the range opening is, right? The opening of the candle, you know how low it went, how high it went, and where it closed. All of this information. I know it sounds like a lot for now, but trust me when I say that it's going to be fluid. It's going to be like you're looking at the back of your hand at one point, right? It is a lot of information that a candle gives you. Because the thing is that if you have the next candle printing like all the way down here, right? You have a next candle printing down here when you have this one all the way up here. That now tells you that price action does have a resistance all the way at this point. So we have a potential to come back to that area to resist from it and then continue downward, right? So that's what candles present to us. But I will tell you when that's applicable, right? Because if you just want a quick little shortcut here, it's gonna be your pre-market high, right? Your prior day high and prior day low. So pre-market high, pre-market low, prior day high, prior day low. Those are your standard resistance and support levels to observe in a day, so that it can tell you that it's going to be kind of hard to get over the prior day's high. So we're going to need extreme volume here to push beyond that prior day high. So you're going to notice there that there's going to be a bunch of candles like wicking there. There's going to be a bunch of wicks like these here, right? We're going to be wicking up to that resistance of the prior day high. It's going to be tough to get over it. Sometimes we do, sometimes we don't. But that's part of the probabilities in trading. Okay, let's go ahead and move on to the next slide here. Now, what I want you to see here, team, is that these, I know it's hard to see, right? But it really is just a line. And this is just another line. So one of them is green and one of them is red. So these are births. This is the birth of a candle, right? The color is chosen based on the initial direction of the candle. So if the candle is going to turn red or green is determined from the birth of the candle. So if this thing goes up first, then it's green, but it needs to surpass its opening value. And if this is going to turn red, then it's going to turn red because it declined first. And that is how the candle colors are determined, which some people tend to use as critical information. They use it as how many red or bearish candles do we have printed throughout the day versus the green ones. Not to say that that's something I personally backtest, but I'm saying that that's it's possible that somebody may look at that and they may find some type of analysis there that can help them or gain benefit over the next day. I'm not sure. I've never done that myself. I don't really see a use for that. Okay, so let's go ahead and move on to the next slide here. Okay, so now we have, within candles, we also have candle types. What does the candle look like? How did it finish printing? Right, so in this case, these are hammer candles. Let me just explain to you real fast, using the green one because this is going to be the easiest one. Remember that the green candles open at the bottom of the body, right at the lower end of the body, and they close on top on the body. The wicks are displaying to you what the range was during the life of this candle. So if this was a daily candle, then it took the entire day to reach all the way down here, then recover, and then move all the way up here, and then come down and close at this point at the end of the day. Right? So a hammer candle is distinguished by its short wick on top and a long wick at the bottom. I will say it is a little dependent. I know that I mentioned here that the longer the wick, the better the candle. Yes. But sometimes, and just sometimes, we have to use our discretion and other tools to understand when this long wick is actually just a signal for a continuation to the downside, because it's like people are starting to kind of crumble from the top. Right? So we have to determine that with our discretion. But know this for a fact, that the shape of this is a hammer candle. But I will explain to you when it's considered to be a hammer candle, because it is conditional. Hammer candles cater bullish properties. Bullish properties meaning that they often lead towards an upside. Bearish means downside for price declining. Okay, so they can be labeled as bullish when colored red or green. Okay, so this can be a bearish candle. I'm sorry, the bearish color, red, can be a bullish candle in both scenarios here. Curious, right? Now you're saying, how is that possible, ARCa? How can you tell me this? How would I never know this? Okay, so hammer candles can alert the trader of a potential end of a downtrend or an uptrend. Okay, a hanging man is signaled if a hammer candle appears at the top of a trend and can be bearish with either color. I will explain further. This down here, this is a hammer candle because we have price declining, right? So this is a hammer candle, and then it led to a reversal in price, right? So this was the signal here. If you were a discretionary trader, you're noticing that price is declining. You're waiting for a sign to see if there's anything that can potentially lead price action to a reversal, right? So you're looking at the decline, and you're noticing here that there is a potential of us printing a hammer candle. And it prints, and it leads to the upside. Good trade. Okay, now, inversely, this is a hanging man. It is not a hammer candle. Not because of the color, because of where it's located. Notice how price action went up. So price action went up, printed this hanging man candle, and price action reversed, right? So this is a typical formation here. The hanging man is the hammer candle located at the top of a trend. And your hammer candle is your hammer located at the bottom of a trend. Whether it's green or red, it's okay. Right here, the hanging man, whether it's green or red, it's all good. It's the hammer candle printing at the top of a trend. It's where it's printing, not the color that it's printing. Okay, team? Let's go ahead and switch over here to the next slide. Now, an inverted hammer, that also has similar properties. Okay, considered to be both bullish and bearish regardless of the color. Again, by the print, not by the color. Inverted hammer is known to appear at the top of a downtrend, at the end of a downtrend, right? So it'll appear after a downtrend or uptrend and signals a potential reversal of price action trend. Okay, so I'm going to explain this further. A shooting star appears at the top of an uptrend. So inversely, the shooting star will appear at the top of the mountain, right? And your inverted hammer will appear at the bottom of the mountain. Okay, and it signals a potential reversal. Okay, so let's go ahead and talk about that. Here's a shooting star candle. So we have a massive uptrend, and then you get this huge wick to the upside and prints this that looks like an inverted hammer, but it's not because it's at the top of a trend. So it's considered a shooting star. This shooting star formation is giving us the potential of price reversal, and it did, right? Let's go to the next one here. Now, please remember, team. Please remember. Okay, I want to just touch on this a little bit more. Actually, a shooting star can appear with a smaller body, right? It doesn't have to be this big. The body can be down to this area here, right, with just a wick all the way on top. This is the maximum area that I personally would consider as being a shooting star. Okay. Now, if the candle did appear at the bottom of a trend, similar to this here, this is your first signal that you may or may not get a reversal to the upside, right? So that was your little hint that you may get one. And you know what? Here's a potential one too, right? So we're downtrending here. And you know what? I'm gonna just go ahead and use this example as the better one. We'll continue studying it, right? Don't use this because we can't see everything here. Okay, so you have the downtrend, and you print that little wick, higher wick to the top side, body with a small wick at the bottom, and then price reverses. I would really have liked to see the print like this down here, but since we didn't get it, it's okay. In your discretion, you would determine whether the setup is good or not. So if you're not getting a high quality long wick candle, then, maybe don't bet your life savings on it. You can probably bet a smaller portion of your trading portfolio. Let's move on. So now, let's see, what was it? The spinning top doji is actually a candle that signals to you that there is, for example, a tie between the bears and the bulls for that time being. Right, so spinning top doji consists of what looks like a berth with equal wicks to the top and the bottom. Let's see, I'm getting a question here. Are the directional formations stronger or weaker from one another on a type? No. It's that's going to be dependent on the asset itself, right? So if you're noticing here that you're getting a 4 hour, if you're getting a 4 hour shooting star on, ticker symbol, ticker symbol AMD, you're going to want to back test how many times you're succeeding the downside with a shooting star on a 4 hour period. Right? So you're going to back test to see how valid this candle is on a 4 hour time period of this particular ticker. Because you may not be getting the same results on, say, Apple or American Airlines, right? You may not get the same statistical results on a 4 hour read between two different assets because they both cater different psychology. They're both their own characters, right? So you'll be able to tell which one is more valid and which one is not. But that's a little ahead of where we're at right now. We're going to jump into backtesting a little bit later. But yes, that is a good question. It is a very good question. But that would depend on the psychological belief that this type of candle is going to be valid in this asset in the 4 hour time frame or not, right? So we're gonna have to test those things as well. They don't have to be written down results. I mean, you always could write down the results, but it would be something that you would have to discretionarily backtest manually. And you can always just do it like, okay, I'm going to get ready for this day trade today. And I'm noticing here that there's a shooting star. Should I get short the stock or not? So you're going to tell yourself, well, you know what? Let me look here for at least the last 2 months of 4 hour prints and see how many of these shooting stars reach the downside on AMD. And then you'll have your results. You'll be like, okay, well, more often than not, we succeeded it. So then that means that I have a 70% probability that this thing just goes downward. And your 70% probability would tell you how much you can end up betting on this play. So if it's not a slam dunk obvious play that is going to the downside and you have some risk, so maybe don't do like your full trading portfolio, right? So now, what time frame is best to look for these candles and use of trend? Good question. These are valid in every time frame. It's starting from the minute time frame, right? What I will say is that if you start using them in 1 minute, 2 minute, 3 minute, 4 minute, and 5 minute, those are all those tiny little time frames. They have a higher strike rate for loss. So meaning their batting average is actually not that good in the immediate short-term time frames. So what I generally like to see is a minimum, because if I'm using candle analysis in formation, like these right here, like a hanging man or something like that, I want to read those more in the minimum 8 hour period. So 8 hours and on is where I really see the best results coming out of these candle formations. Now, that's not to say that I don't use them in the 5 minute, because I use them every day in the 5 minute. But I often know that the day trade is not a place for me to fully leverage my entries, right? So that's an important thing to know, that the shorter the time frame, the lesser the strike rate, the smaller the bet, right? So it's a high risk play, so you don't want to bet everything. And you say, let's see, what time frame is the best? Got it. So hence the back test. Yep. So it would be harder to determine price movement within the 1, 3, 5 minute, 15, 30, and hourly. You can determine that, but the determination of price action within the time frames that were just mentioned, Jim, would be closer to maybe, I would say, maximum within 2 hours, right, of a trading day. If you're trying to see where an asset can go in a weekly or monthly basis, take a look at your weekly, bi-weekly, 3-week, or monthly, candles, and expand it outward, right? Zoom out. So that would be the best way to observe what the potentials of this asset can be more of in a larger time frame. So you need a larger sample size to determine price action. Correct. Absolutely correct. And knowing this is actually something that can separate you from a lot of people, because you can see that, okay, well, this is the monthly chart here, and we're noticing that every single monthly candle printing, we're printing on a downtrend. So then you hear, oh my goodness, we are ripping to the upside. My asset is up. My asset is up 28% on the day, and it's only here. But you're noticing that the monthly is doing this. So then you're going to gauge the probabilities here and say to yourself, well, if the monthly were at a resistance, it's probably unlikely that this is going to continue to the upside here because it has all of these prior wicks and prior resistances to get over first in order for it to continue on and on and onward, right? So by reading the monthly and then comparing it to current price action, you can determine movement. And I will say this, that you get close to predictive territory when you start using the monthly candle analysis. Forecast territory would be under that. So the higher the time rate, the higher the batting average. All right, so let's go ahead and move on to the next slide here, team. And this is going to be your Gravestone doji. All right, so a Gravestone doji looks just like this here, very similar to an inverted hammer or a shooting star. The only difference is that it's the birth of a candle with no exposure wick to the downside. So this Gravestone doji is a way to determine that there is weakness coming into the current trend. It's not the final candle. It's to tell you that, hey, there's weakness to the bulls. The bulls are starting to exhaust, so maybe consider taking your position exit soon, right? So as you can see here, printed this huge Gravestone, one more, and then printed a massive shooting star, and then this thing continued to the downside. So a lot of people will take into consideration signals like this Gravestone doji. They wouldn't wait all the way for the potential reversal candle. You can do that. It's okay, but you don't have to. There are several different strategies and enough strategies. I mean, God willing, there are enough strategies out here and ones that don't even exist yet because you don't exist in the markets just yet. For you to be able to create your own and be super successful, that's how much variance and variable there is available to trading stock or trading price action. Okay, so let's go ahead and move on to the next one. Opposing the Gravestone doji, it's a dragonfly doji right here, marked in green. It's very much the opposition of the Gravestone doji, right? So this would be pivoted towards the upside. Here's the body of the candle, right? And this is the long wick. So just like the other one, this is telling you that there is a potential weakness to the current downtrend, and this is likely getting ready for a potential reversal. And that's exactly what happened. These nuances, not a lot of people pay attention to. And know for a fact that, again, I tend to find the biggest hit rate within these on the 8-hour time frame. That's not to say that they can't be used on the 6-hour, on the 4-hour, on the bi-hourly and the hourly, because remember, again, I definitely use them in the hourly time frame. And I definitely use them in the bi-hourly, 3-4 hours, 6, 8, 12 daily, bi-daily, 3-day, right? 5-day weekly. I use them everywhere. What I will tell you is, as a discretionary day trader, momentum trader, I do not use candle analysis in anything smaller than a 5-minute time frame. The only candle analysis that I will use there is something that's called as a fair value gap. And you will learn this later on. Okay. What is it called? An inflection or, an imbalance. A price imbalance is the inner circle traders, his strategy. You'll learn it later, team, but it's something that I tend to use even on the hourly. He uses it on the 2-minute time frame. And, he's also a very successful trader, but I personally don't like to use anything under a 5-minute. And he definitely does not like to use his price imbalance or his the fair value gap in anything larger than a 2-minute. So you can see how much room there is, right? So I like to use his strategy in a larger time frame, but he doesn't like to use his own in a larger time frame. Anyway, let's go ahead and continue on here. What you're observing here is actually candle formations, right? These patterns are not foolproof and should be used in conjunction with other technical analysis tools, indicators, and or backtests to make informed decisions. So in other words, you can't just use a candle read to make the entire decision, entry or exit, right? It's not enough. But remember, We're learning the first aspect of a system here. Zenit, how often are these candles seen on a higher time frame? That is actually an average that is not really known, because every single, I mean, you could get a read on that, man. You could get a read. Say, for example, if you tested, let's say this. I'm gonna get creative because I don't really look for that answer myself, because I look for the individual stock trading, not the trading sector. So I want to bring you into this. If you're looking for a tech sector, then you can backtest all of the daily candles on the tech sector stocks, right? And then you can see how many times they print on a daily time frame. So one asset before another. Now, you may be thinking to yourself, wow, that's a lot of work, and I don't even know that I'm willing to do something like that. Well, there are tools to get around that, right? There is the biggest database in the stock market. Not a lot of people know of this, and it's called Polygon, not Matic, not the crypto. I'm talking about Polygon, the database for historical data. So it has literally everything, and the only thing here's the detail: it's only accessible through Python, meaning that you need to speak Python code in order for you to extract anything from that database. So let's just say this: that you wanted to know over ticker symbol IBM. You wanted to know how many times the simple moving average 5 period crossed over the exponential 13 period in the 4-hour time frame over the last 3 years and 7 months. Well, that database, by coding that assignment, it can return that information to you almost with a blink of an eye. So, for example, this is something that I just picked up from another quantitative trader. He started using Polygon to determine small caps and micro caps, right? This is something that I spoke to Jim about. So 90% of small caps and micro caps are shorted like 70% of the time, right? man, if you knew that before you got into small caps, right? If you knew that before you got into small caps, then you would know that you would just get positioned short. Man. So, and that was Polygon telling you that data, right? So it's telling you that almost all of them are shorted their entire lives. That, like, you don't need to get any deeper than that, right? So it's telling you that you have to be completely protective against the small cap assets and the or micro caps, right? So here's also to add to that data is that they are shorted the majority of the time when they reach above $1. That is position short for systematic traders, discretionary traders, participants in retail, smart money, right? Institutional, whatever you want. Yeah, it's a critical resistance there. It definitely is. So know for a fact that a lot of these assets, they don't survive the $1 mark because you have literally a hunting sport for that break. And there are so many people waiting for that. Now tell me that you're willing to get long another small cap after this. There's room for you to get it. But I'm going to teach you the system to determine when to get it, right? Because that's where you're going to separate from the other trader. You're going to know when to long and when not to, right? So it really does not matter too much in the shorter time frame. Remember this. I am not saying that a small cap or a micro cap is invalid. What I am saying is that most of them are shorted most of their lives, statistically speaking. So that doesn't mean that a small cap or micro cap asset does not have the potential into making itself, into making itself above $1 and holding that above NASDAQ compliance so that it could become a NASDAQ ticker, right? So that it wouldn't be one of those pinks or SPACs or OTC tickers, right? It wouldn't have to be the over-the-counter small microcap asset its entire life. It's going to be hard to determine which one has that potential. I'm not saying it's impossible, but what I am saying is for you to be completely protective of yourself and your investment strategies when you are trading those assets. Okay? So you will have to do your due diligence here to really determine if this is going to be something that is worth investing in or worth not. And then you're also going to know with this course when that's a potential for you, because it's not always. It is dependent on current market conditions, economical factors. Where's the Fed? Where are we? Question, can you read the candles the same way to determine price action and find the gaps to make trades in micro and small caps? Yes, actually. So if you are observing a macro time frame gap, say for example a 3-day or a 5-day gap, the probabilities of you not filling the gap, meaning that you're above the gap, right, and you're going to retrace, price is going to retrace on a 5-day time frame, it is more likely that it's going to bounce from the top of the gap than it is to fill the gap and then continue onwards. So yeah, those are what you're going to learn later. Actually, in formation theory, you're going to learn that as in moving averages too. You're going to learn that literally in the next week and in the following week. You're going to understand what the inflection points are, and that is definitely one of them. I mean, gap in the sense of price movement between areas of highs and lows. Yeah. So sometimes price movement can entirely jump from one, an exponential jump from one valuation to another. Those are critical, right? And that's exactly what I mean. And within the gap, sure, you can do something that's called range trading. So if you have 15 cents that's trading up and down, sure, you can find that range and you can actually do something that's called range trade or counter trend trading. And that is a very traditional formation that we're going to learn later, right? It's called an ABCD strategy. And man, it's completely doable. Okay, team. So remember that you must not depend on just the candle formation. Okay, so here I'm going to just jump into some light formation. I love it, Jim. Let's see. What was it called again? Pedro Murillo. I spoke about range trading, counter trend trading, and trading the ABCD strategy. So those are 3 different strategies that you can look at that are very similar to each other, and they're within a range. Once you determine that range. Polygon. Yeah, type in Google Polygon database or a stock trading database, and it'll take you straight to the site. The thing is that I think it's like $200 a month, so it's definitely not free. So you're paying $200 a month to get this blank white piece of paper, and then it tells you type. And it says for you to literally type the command, and you're like, what do I do again? But here's a little tip, right? Here's a little tip to both YouTube and to my Discord master students. You don't have to. You can use language models to your advantage. You can ask ChatGPT to say, for example, I need you to type in Python that I need this moving average or these candles or whatever condition you want, so that you can type that code of Python into Polygon. Can you create that code for me? You know what I mean? So you can literally ask a language model to create the Python code so that you can ask Polygon to give you that output. My goodness in heaven, team. All right, so let's go ahead and move on here to this formation. So team, this is a 3 white soldiers formation, right? Sometimes the 3 white soldiers formation has this really bullish outlook before a reversal, right? So I'm going to give you 3 different appearances. First of all, the first appearance is this. After a quick downtrend, you're going to print 3 green candles in a row. The shorter the wicks, the better the quality of the 3 white soldiers. So sometimes, and just sometimes, you can get a quick boost to the upside and then price reverses. This is a reversal formation. And I can give you another way of looking at it, right? So this is not such a good quality one. As you can see, the reversal was not that big because you have this massive wick on the first candle here. And then you have another one that has an okay stance, right? So you have the three white soldiers print back to back to back, and then you get this like quick upside, and then you get the reversal. So that upside continuation can sometimes give you a quick little discretionary boost, and it can be a massive one. But if you know how to trade it well, right? But know that oftentimes, while you do have an upside continuation here, your reversal is really what the 3 white soldiers are looking for. All right. So let's go ahead and move on. Yeah, not a problem, Pedro. I got you, buddy. I got you. Let's move on here to the next formation. And I want you to notice what the price is currently here. Okay? Know that the price action was at 562 at this point here. Here is what you're not gonna believe. I have this highlighted with a trend line here with a perfect touch of my regression. And this right here, gentlemen, ladies and gentlemen, is GTII at $5.72 into the $7 range, where I noticed that we had a potential 3 black crows, right? So the 3 black crows formation, sometimes people look at it as 3 red candles. Sometimes people look at it as 3 wicks. Sometimes people look at them as 3 Maribozu candles, right? So they're really thick candles, right, back to back from each other to suggest either a reversal in price or a continuation to the downside. There's still confusion over this because we're in the cusp. We are about to change the entire definition of a 3 black crows because sometimes 3 black crows can be, like I said, we have to see how it backtests. For me, a 3 black crows formation wasn't this really. It wasn't the wicks, but I was told that it was back then. So back then, we were using the three wicks here before, the long wicks to the upside. That's not a good signal, right? And as you can see here, we have 3 black crows formations leading towards the downside 2 times in a row and 3 times in a row. Within I think this was, I believe, the 4-hour time frame or the 8-hour time frame. So around the time where I was looking at this, you remember this is a while ago, right? GTII is sitting at around $7, $5, around there. It's a long time ago. So this was around the time where I was noticing that I was printing what was then called as the 3 black crows. I was printing a bearish candle formation at the resistance of a regression that I drew, a macro regression. So I started saying that, hey, you know what? To my 32 Twitter followers as ARCa, I started saying, hey, you guys, GTII is about to face a massive rejection from this huge regression. My goodness. So Mark is saying my brain is melting. Screw the recommended 4 to 6 per week study. That does not cover the 5 times over. I will rewatch this second week video alone to be followed by the recommended study time. Yeah, right. As if, right? Oh my goodness, man. This, it's critical information. I'm going to bring to light what I wish was brought to light, to me right from the get-go. So I spoke to I didn't have but many followers. I didn't have many followers back then, team. You have ARCa Bulls. ARCa Bulls is proud to stream and to speak to almost 15,000 subscribers today. It's a blessing. But I did not have that back then, and I couldn't speak loud enough. I couldn't speak loud enough. So I said, GTII, you're at a critical resistance, and you're going to be facing a massive downside from here. And I put together a 15-part thread that said, Guys, this resistance may lead into a zigzag to eventually reach a 30-cent target. Oh my goodness. I was immediately a Kramer. I was immediately Ken Griffin. I was shorted. I was short this asset. I invented shorting apparently. I was a shill, right? And I was hired by smart money, right? Apparently I was getting $5,000 to $10,000 per thread that I was putting up on Twitter to my 30 followers, right? And then I started getting a bunch of followers because I said this. Falco saying, bro, I found this stream while on a rabbit hole about music. I legitimately thought those were notes on a piano roll for the past 5 minutes trying to figure out what you were saying. Dude, wait, so that piano roll that you're talking about actually looks like FL Studio, right? With the dark background is definitely a piano roll here would definitely not be Ableton. My bro. Oh my goodness, man. That is so funny. And I am also a seasoned musician. I can just say, let's just leave it at that. Right? So, but dude, that's really funny. Oh my goodness. So, team, I said, okay, you know, the largely believed different type of 3 black crows. Guys, you will have no idea how much these formations change over the period of 6 months. They all change all the time. It's if there's anything that's constant in stock trading, it's going to be change, of course. You know, given that price action and volume are already chaotic and completely, you know, random. Right? So I explained, and I immediately became, you know, like I was a short seller and I was getting paid all this money when in fact I didn't have a penny to my name at 30 followers, you know? And I was just trying to warn people that this is likely going to take a crap. And I put 30 cents in there and people were just not believing what I said. And they were like, dude, this thing is a bomb waiting to explode, right? And I said, guys, it's just, I know that there are potential catalysts and all that. I know. This was the 4 hour, either 4, 6, or 8 hour. One of those two. One of those three, sorry. So I put together the thread and I said, guys, this is just gonna fall because of technical reasons. That's all. There's no any other reason I see, right? I don't see any bad news. I don't see nothing. Right. So this thing continued to fall and continued to fall. And my followers continued to rise and continued to rise, saying, how did you know that was going to happen? And I was like, man, it's just the freaking candle formation. There was a resistance at a line, you know, and I also back tested the downside too. I wasn't about to explain the statistical properties of this to like all these people who are literally throwing rocks at me. Right. So I told them, guys, listen, it's just, if I were you, I would just, you know, I would just cut out, because there are people here that $5 or $7 that had an average of $8, $9, you know, and I'm thinking of them. I'm like, dudes, get out, because this is probably going to continue, and it's going to suck a lot, right? So there's weakness coming in in a very large macro scale, and I have no idea why, because I don't usually follow fundamental data that is meant for the macro time frame and investment strategy. So I don't usually follow that fundamental data. I follow fundamental data for the short term. And that is a very unique set of data sets. Mergers, partnerships, right? Staff changes, particular to the CEO, particular to the CFO, right? If we have forced share buybacks, forced share recalls, right? If you have what else can we have for the immediate short term? Something that'll shock. All of those little things that you can think of, those things. Not even earnings, because earnings since the 90s, teams, it's not the same thing. You know, you can see that from what was it, like 3 or 4 months ago, when Netflix put out a $56 million beat on their earnings report. They lost 15% or 22% their asset. You know what that means? That was like a 70, or I don't even know how much it was, 70, 60, $50 decline. $50 per share decline. And they were good, and they put up a beat in their earnings. They were good. So damn, no way. I'm not going to play the options like that with earnings, right? I'm sorry. I'm not going to play entry on shares based on earnings. I'm going to just follow the guide. I'm going to say to myself, just wait, hold on. Let's see what they say. And if this thing just goes to the downside, we play the downside. If we go to the upside, we play the upside. But do not execute based on what I just said, because there is a lot to consider when doing that. Okay. It's not as easy as just saying, if it goes up, we're going up. No. Okay. No. Just, you'll learn in no time why. Okay. So I just wanted to put that little story out there, team, that I did not mean any harm to saying that GTI was going to go down to that level. And guess what happened over the next 2 months, over the next 4 or 5 months? It declined. My target from $1.50 was like, okay, just like I recorded my videos, I say, hey guys, you know what? So far so good on the thesis. Well, obviously not, right? I'm just saying that the levels that I called were doing good, right? So the next step here, we were at $1.20 or at $1.70 around there. I said that my support zone is coming down to 47 cents, 47.32, I think I said. And then on the next few days, I think it must have been a week or two, we wicked to 45 cents, 45.02. And then from that 45.02, I was already leading, saying that there was a 5-day volatility versus momentum backtest that was suggesting a potential 3,200% move to the upside based on this condition alone. And that would send price action to a potential topside target of this. And then I started saying that, and I started retracing back on my targets. $3.01 was one of those targets. And it was also a 560% rise from 45 cents. So the trigger, the signal fired off. It fired off greatly. Right into that 45-cent touch where volatility spiked when it reached all the way down to that wick. And then it started recovering immediately. At that moment, the signal of the 5-day volatility versus momentum backtest, which, by the way, you will all learn here, that signaled what then, in a few days, turned out to be a 560% gainer. And that, team, it was marvelous, right? ARCa had saved the world. I got like hundreds and hundreds of followers because I said that, and it started happening, right? So then $2.98 comes in. I said on Twitter, congratulations, team. The signal led us to this target here. We got to see what's next. I don't know if the upside is continuing. There could be. I don't know, but this is the end of the signal. And then from there, ARCa, you said $94,000, right? But no, it's just statistics are not certainties. They are definitely not certainties. They're just probabilities. Next, a bearish and bullish engulfing candle formation, team. Okay, so this first area that we're looking at here, you're looking at a bearish candle, right? The entire body of this candle here is engulfing the prior green one. See? It must be the forward candle engulfing the prior candle. So this is a signal to continue to the downside, right? Now, opposing that, let's go ahead and, erase that here. And opposing that, let's take a look at the inverse of that. This is a bullish engulfing candle formation. So now we have the green candle engulfing the prior red one. So the body must engulf the prior body completely in order for us to determine a continuation. So bearish engulfing, downside. Bullish engulfing, upside. Right? So make sure to know those differences, because this formation, this candle formation repeats historically more often than not. Okay, team? Next slide. Let's take a look at a tweezer bottom and tweezer top. Okay, I know it's going to be a little hard to see, but this is the wick here, and this is the red wick right up here. Try to identify whenever you can see two wicks very similar to the top. That's going to be your tweezer top, suggesting a downside. And here is another one. It printed the tweezer tops and continued to the downside. This right here, this was your tweezer bottom, right? They suggest a potential upside continuation. There are no psychological targets to look out. To look out for, right? So it's just to tell you that there may or may not be a reversal in price action based on those conditions, based on the tweezer bottom or tweezer top, right? So please make sure that's actually another formation that I tend to use very, very often. I use it in everyday trading. Okay, team, let's go ahead and now move on to what's going to be our assignment and drill. Okay. I need you to locate at least two other candle formations in two different time frames of two different tickers. Listen carefully. Locate at the end. YouTube, you can also join in on this and actually tag me on Twitter, and I will correct your assignment. But remember that this is the last week that I'm going to be presenting live and for free. So please go ahead and consider reaching out to me at ArcMastersCourse. Right? I'm going to go ahead and type it in here in the chat for you at gmail.com for your seat. Get enrolled, reserve your seat, because I only have room for maybe 3, maybe 4, as you can see on the other side here, that I have a full house of students. Right, team? So please go ahead and get in touch with me there, and I'll pass you the syllabus, the disclaimer, and all that good stuff. So, master students, listen up. Locate at least two other candle formations, right? So get me a bullish engulfing or something in two different time frames. So you're going to notice you're going to get two bullish engulfings on the 5-minute. You're going to get two hammer candles or whatever you want in the hourly candles, right? So that's going to be two. Locate at least two other candle formations in two different time frames of two different tickers. So then you're going to need another two candle formations on the other ticker, right? So the point of this is so that you can see that maybe the bearish engulfing didn't work on this ticker and it did on this ticker. So if you have to repeat the formation, so be it. Okay. So to obtain some more information, I'm going to go ahead and paste here this incredible video. This is an awesome video, team. Very, very informative. Video on candle formation, candle analysis, right? So I like to share what I see, right? So I'm going to go ahead and type it in here in the chat for Discord and here in the chat for YouTube. Daniel Gonzalez saying great class as always. Thank you so much, my bro. So team, please go ahead and refer to this drill. I encourage you to participate in these drills, to participate in the class assignments, and participate here in the questions, as this is going to lead into a great future of trading, team. And know that this information, these videos, will be accessible to you as master students for the rest of your life, and the community here as well. You're looking at 160 to 180 master students from track 1 to track 4. So I'm going to go ahead in time, give you access to track 2, track 3, and track 1, so all of you can intermingle, right, team? So know for a fact that you have a complete support system here, and I will try my very best to find the type of trader that you are. Ian Tucker, I appreciate you, my brother. Thank you so much for coming on by. So now, YouTube and Discord team, please know that the class is dismissed, and now you can go ahead and ask your questions away. The floor is yours. So ask any questions that you may or may not, that you may have, right? And I'll try to answer them as best as I could. Jim R, ARCa, this entire video tonight, where is it in the masterclass window? So I'm going to go ahead and share it I'm going to share the window here, right? I'm going to go and share this. So take a look. I'm showing you here the Discord, right? So look on the left-hand side where it says weekly schedule. You're going to go to the week 2 candlestick analysis. Right? So that's where we are, week 2. You click on week 2, and then you will see down here that this is the assignment, right? you will also see the PDF. So this is the PDF right inside of week number 2 on the left-hand side of the Arc University. And you will see the PDF, right, that we just used here so you can annotate, and also the video that you can use for reference. And no, following that, team, here's week 3, week 4, week 5, and I'm going to be adding the 17th week into this as well. Okay, team, so now I can go back into the lecture room. And a bunch of people here. Here we go. Good class again, says options. My brother, thank you so much. Really appreciate you. So I'm going to go ahead and leave this window up now for YouTube to observe as well. But if any YouTube members have questions and any of my master's students have questions, please go ahead and start asking away. So, and actually, let me just open my window here because it's getting... Okay, sorry about that. I saw the first question come in saying, ARCa, is there a candle type you use over others? Mr. I'm sorry, Wells, right? So yeah, traditional candles. Now, I know that I can use hollow candles for determining volatility, and I can use Heikidashi candles to determine trend. Now, the reason I don't use trend type candles and volatility type candles is because I use volatility in linear, and I actually use momentum on stochastics. So using an exponential 3 period over an exponential simple 14 period is the traditional look back, right? But yeah, I use traditional candles, and I need to use traditional candles in order for me to determine the raw price action combined with volatility and momentum through other metrics. Very good question, my brother. Or I'm sorry, I didn't mean to call you brother in case, you know, you know how it goes. So let's see, unclear on what shape makes a dragonfly doji. Good question. Let's go ahead and refer back to the screen here so that I could display to you what a dragonfly doji looks like. Right, so let me go back into the lecture here and come back in to the dragonfly formation. Okay. So let me get rid of, let me go ahead and get rid of the slide here. Now, just like a gravestone doji, right, from the prior, I'm going to get rid of the drawings here too. Okay. So just like a gravestone doji, where you have a birth of a candle with a long wick, the opposition of a gravestone is your dragonfly. Now, it does not matter the color. It can be green or red. The only thing here is that the dragonfly doji is printed at the bottom of a trend, right? So it must come down, the trend must come down, and it starts to print this dragonfly doji, right? The opposition here is that the gravestone doji starts to print at the top of the trend to signal potential weakness coming into the trend, okay? But the bottom line rule is that they both must have a birth of a candle and no wick exposure to the downside, no wick like that. Okay, and that is what signifies a gravestone doji or a dragonfly doji. So the dragonfly doji pivoted towards the upside, right, like a traditional hammer, and your gravestone doji pivoted to towards the downside here, like an inverted hammer. Right. So let's see. So the 3 white soldiers. So Senor Pennington is asking here. Just a sec, team. Thank you, sir. We are brothers. Mr. Wells, thank you so much for clarifying that. I felt completely embarrassed there, man. You have no idea how many brothers I've called that are in fact sisters, right? All good in the hood. But Senor Pennington is asking, so the 3 white soldiers are 3 black crows, both signal reversals for downside. The chart examples seem to be both trend down after both soldiers are crows. So now remember that the 3 white soldiers is typically known as a reversal formation to the downside. So the 3 white soldiers prints after a downside, right? So let me go ahead and get back into that. I think, where was it here? Where is it? There we go, right? So yeah, usually you get this, I'm going to get rid of the drawings here just a moment. Let's erase everything first. Here we go. Right. So you get this downside first, and then you start to V-shape recovery. Right. So then you start printing out the 3 white soldiers. The 3 white soldiers signals a potential quick little pump to the upside, but overall, it is a trend reversal. Right now, the opposition here is that yes, you are seeing that the three black crows are printing continuation to the downside. Yes, you are here, but remember that this is an old chart. Now, what's happening, I'm teaching you the new trend, okay? 3 black crows are signaling a reversal now, okay? So 3 black crows bullish, 3 white soldiers temporarily bullish, but mostly for a reversal, okay? So that's going to be in your discretion. I have to give you those things because we're in the cusp. We're in the cusp of deciding exactly what's going to happen with these formations. Starting in November 2021, a descending broadening wedge was a bearish formation historically. But starting in November and afterward, it flipped to bullish completely. The narrative flipped entirely. And that's something that happens in the markets team. The strategies will change. The narratives will completely flip. It's normal. But we have to observe price action in order for us to determine what that potential could be. So YouTube, please go ahead and continue asking questions. This is not just for your for the master students right now. I'm including you too. Okay. So Jim is saying, I mean, this whole video was recorded, but where is it besides on YouTube in our masters one? Oh yeah, that's where it is. So you don't see it here right now because as soon as it's finished recording, let me go ahead and show you, right? I'm going to come back to the Discord window here for you. And yeah, so take a look at the window, right? So as soon as this is finished recording, I'm going to go ahead and refer back to the weekly schedule, and I'm going to paste it right in here. Just like I did here for track 3, where it says ArcMastersCourse track 3 week 2, it's going to say ArcMastersCourse track 4 week 2 right down here. So as soon as we finish recording this, then it'll be available for me to paste onto here from YouTube. And then you'll be able to catch the PDF and all that good stuff as well, okay? So let me come back into the lecture room and see what the deal is. So Mark saying, damn shame 4 may be the last. Okay, so let's see. When the candle opens and, when the candle opens and red-green is determined, how is it based, i.e., like on current group of trades executed, first, next trade, etc.? Okay, so the color of the candle, you're going to notice that it doesn't matter too much unless it's an opening candle or a closing candle or a weekly close or an opening close. So say, for example, you're going to start the weekly with a red candle. Psychologically, a lot of people don't like that. And if you end the week with a red candle, psychologically, people don't like that. So they're going to see a downside coming into the following week, psychologically speaking. It's the belief. It's not the print. So, but when you're looking at minute timeframes or 5-minute timeframes and you're observing the colors don't matter as much. The colors don't matter as much within that. Why? Because it matters more the group of candles creating a formation around a few candles together. So the immediate colors, they don't really matter. Right? So what I'm trying to tell you is that it really matters more in the higher timeframes. And that even then, right? Because what if you print a red candle, but it's a hammer candle at the bottom of a trend? Well, it's a red candle, but we're suggesting an upside continuation from here. So let's go, So there are conditions around this, but it's a good question. It's a valid question too. And a lot of the times people look at candle analysis more in the shorter time frames than they do in the larger time frames anyway. So if you're looking at the shorter time frames, yeah, I would suggest looking at your immediate short-term candles as not really the color, more as the group of candles gathered to create an entire formation. Like, people say an inverse head and shoulders or a head and shoulders. We're going to learn this in formations next week. They say a triangle or a bull pennant, right? All of those things are formations, and they're a group of candles formed in one formation. That's what they really look out for. WTech 4-hour candle are during 9 to 13 and 13 to 17. Try to figure out actual time ranges and how to apply to actual open market times. So if you're looking at you know what? It's a little bit of an advanced question right now, but I am okay to display to you what that can be. Let me. I wasn't ready for that setup just yet, but hold on just a moment. Somebody asked me that question recently. So YouTube, you can see TradingView, correct? Let me go ahead and switch TradingView here for Discord and go into. Hold on just a sec. So you can see TradingView now, right, team? Let me go into something absolutely cleaner. Okay, good deal. Let me go into another ticker here that has almost no let's do CS something random, CXAI. Right? There's not much information in here. So let me go ahead and get rid of the linear regression band, put in the 4-hour time frame, and I have to give you the actual close to, the range of the day open and day close, right? So let's go ahead and put that at the post-market and pre-market information, right? Because you're going to notice here that it's not that much. So when you're looking at a 4-hour time frame, that it's you really don't have that much information to go off of, right? So in reality, you're just looking at around 2 candles on average. So the 5 a.m. candle here, all the way to the here's the thing: the 4-hour candle is going to bleed into the after hours too, and the pre-market. So you're gonna have to deal with bleed from. And that's actually a challenge that's created between 4-hour traders, right? So that's why you would use the hourly candle rather than the 4-hour, because you'll have a bleed. So if you're executing during a 4-hour period, you may be executing at a pre-market into market open, and then intraday into post-market. Zenon, your chart looks different. Check this here. Check this here out on the bottom right. Click on the logarithmic, just in case that's there. And also, I'm not using the auto function here. I'm using a manual zoom in and zoom out. Okay, so yeah, the opening of I'm at 6:30 a.m. Pacific time for traditional market open, and you can see here that the gap from this 4-hour candle to the next one is literally from 5 a.m. to 9 a.m., which is why I'm telling you that you may have the bleed from the execution at the opening range of a 4-hour time frame into what would be opening at lunchtime NYSE. So executing on a 4-hour time frame may not be the best execution range candle for a day trade. It may actually be better for a swing trade, right? So if you're looking for a day trade, I think the hourly would be better to apply for range. But let me continue on here. WTech, please let me know if that was okay or if I'm still being a little obscure. 3 black crows on a weekly, on a Tesla weekly chart? That is not the best thing in the world. Let me see. Yeesh. And what is the time frame to close this boy? What I will say is that we have weekly volume increase in bears, so this is not done. And what is the 24-hour saying, by the way? But hold on, let me ask. I'm already getting into that. Oh my goodness, because we are still recording. Because no, Jim, no. Yeah, we're still recording. I'll go ahead and put it right after this. So Tony's saying, thanks, ARCa, great class. Truth be told, I read the presentation ahead of time in PDF last week and thought it was too basic. However, with your voiceover, I'm blown away how much more advanced it is. I am excited to learn more by the Grandmaster. Cheers, my brother. Tony, yes. So I wanted to display the easiest form visually, right? So the visceral aspect of this should be compelling to the easy mind, right? So from there, I'm gonna build like crazy, right? So if I can do that, if I can perform that balance, accurately, then I believe I'm becoming a better instructor overall. Although this is going to be the last one I ever teach. So, again, team, consider joining the ArcMasters course by hitting that email, the email address here in the YouTube chat. Okay. So let's see, 3 black crows on the end crows. So another thing is that if we're looking at, let's see, you said weekly Tesla 3 black crows, right? So if we're looking at the actual formation here, then technically this is an invalid candle because of the wick. So we must have candles that look more or less like these. So in all actuality, the validation candle for a continuation on 3 black crows may actually be the next one, which would be starting on Tuesday, tomorrow. And by the way, there is a 24 hours trading thing. I think I forgot it was Robinhood, right? So let's see where it's sitting. I mean, there's probably an infinite amount of time here until European hours start trading, and then the American markets start opening up, right? We still have a long way to go, but no problem in determining that, right? So okay, so it's sitting at 217.16. So our thesis is working out. Right? So we closed at 219. We're closing 3 points below, and our thesis is correct. And I do believe that the bi-daily master students, I apologize here if you get a little confused, right? But I know that my track 3 students understand this a little bit more than you do for now. All right, but this is getting into the volatility versus momentum or stochastic momentum back tests. So this is part of the system that you will be learning, right? So the signal here will officially be fired, I believe, by Tuesday market open, where the condition is the volatility component versus the moving average will be completely fulfilled beyond the 15th percentile of linear volatility. So that would lead to a continuation to the upside and a continuation pivot on stochastics to the downside. So in other words, we're going to be hitting the gas to the downside, and that is literally what we're betting on, team. So we are positioned short on Tesla here for a potential move that's going to lead it. Just to be clear, team, just to show you how far the ARCa Bulls team has been tracking this. Position short for shares was up here. This was our entry right at 240.86. We are sitting at $217 right now. And I am still seeing a potential 20 to 30 point drop from here. So just keep your eyes peeled on this play. But right now, the ARCa Bulls team is massively in the green on this trade. So let's see. So guys, keep on coming with the questions. If you have any questions at all, I'm here for you. Right? Any questions at all, keep them coming. I want to make sure that you guys know that I am here for you as your mentor. You're the mentee. So YouTube, you as well. Please go ahead and involve yourself if you do have any questions at all. I am available to you. So yeah, Zenit, here's one thing that you may be missing, and I'm not sure if this is actually gonna change it, but I am paying for the live market data for all markets, right? So futures, Forex, OTC, ARCa, NYSE, NASDAQ markets, the whole thing. I'm paying live market data for that. So that could also be, that could also show you a little bit of difference here, because there is, I believe, a 5-minute delay. But I would like to continue observing what you mean by difference. So at any point here, during class or into tomorrow, whatever it is, just shoot a screenshot of maybe your hourly time frame, and I want to compare it to mine. But please remember, team, that the class is dismissed. This is that 30-minute Q&A that we tend to have after the course is done, after the lecture is done, and then we can continue. So let me ask my team. Are you guys? Do you guys want to do pre-market prep after this? I can go ahead and re-stream again and get in a pre-market prep for tomorrow. We don't have to end here. I want to continue being there for the team as well. I see a couple of people typing. Continue coming. Because I think it is important for us to look at a couple things here. I would just close out. I would honestly just close out the stream for the week 4. I'm sorry, for the track 4 week 2 candle analysis. I would post it up on Discord. Come back into the stream for YouTube as a ticker picker, and we'll continue prepping for tomorrow, right? Because we're already positioned. And okay, cool. Daniel Gonzalez saying I'm down with the pre-market prep. And then we could continue observing what the futures contracts are looking like. So if I don't have any more questions coming in for the master students, let's go ahead and end the chat here, end the course here. I'll post up the lecture into the week number 2 for track 4, and I'll start rebroadcasting here to start streaming in about 20 minutes. Just take a quick little break here. Bathroom break, right? Water break, come back in, and let's continue the prep for tomorrow. Maybe 25 minutes. What say you, team? I can share the screen here with the YouTube. Nice. Yeah, I do have some thoughts. I do have some thoughts in line. Hey, Candace, good to see you here. So yeah, and if I could offer just a quick little note, just that would be the one thing to remember, team, is just to remember how we're going to cascade the weeks into the system, right? So learning the candle analysis will lead into the candles formation analysis the following week, and then it will lead into moving averages and how candle formations can resist at critical points or invalidate an upside or downside move based on moving averages, resistance and supports. And then from moving averages, we'll go into the indicators week to determine price action, candle analysis, right? Formation theory plus indicators, and it will continue adding and adding and adding to the system so that you can determine a multi-strategy system that you can build for yourself. So you're going to be like kind of a master of all trades here, right? So you're going to know several different strategies to determine where the bulls or bears are currently sitting and how to invalidate your upside thesis or your downside thesis, right? So you have a downside thesis, but then how in the world are you going to invalidate that downside or upside thesis? I want to challenge you to that. And we'll eventually get to that. We'll eventually reach that point where you'll be able to invalidate what you initially thought by saying, okay, let me look at this from a bull's perspective or from a bear's perspective now. How can I invalidate that play? And that often team, it's a very powerful system to apply. Keep them coming, team. I see you typing, but I don't see you entering. And if we are truly at the end here, team, let's go ahead and cut the stream and make sure that we can come back here with enough time and get our charts prepped for tomorrow's trade. Right? Tomorrow's going to be a very volatile day. A lot of anxiety, a lot of angst. All right, team. So I appreciate everybody for coming on by. Please remember to enroll to the ArcMasters course. YouTube, the chat, YouTube, the ArcMasters Gmail is right printed here, just a couple comments away from you. Go ahead and click on that and get enrolled, and we'll see you here on week number 3, as this is going to be the last one that I stream live and for free. All right, team, I really appreciate everybody for coming on by. Let's go ahead and get this thing cut, and we shall move on to a new stream and market prep for tomorrow's trade. So I'll see you in about 25 minutes, team. Just keep an eye out for my announcement on YouTube, and we'll make the damn thing happen. All right, YouTube. I'll see you guys later. Peace and be well.